Millions worth of S&P 500 puts hit the tape on Friday. Then Trump announced tariffs on the EU and Mexico Saturday, despite sending the letters over to these countries on Friday. Plus, the U.S. Federal Housing Finance Agency director claimed Fed Chair Powell is considering resigning, and crypto is experiencing a generational breakout all at the same time. A lot to talk about today, so make sure to like the video, subscribe below, and let's get started. As you can see here, millions upon millions worth of puts hit the tape, specifically for the December 2025 expiration. We saw a lot of these for out the money strikes in most cases, like this 600 here, but some of them were in the money, like this 630, another 630. But you can see a ton of premium across the board the entire day. Even this pretty incredible order, 2.3 million in premium, despite it being over a year until it expires, 595 strike. So reaching a little bit further there in terms of the strike, and just across the board, a lot of puts. And this is super unusual, not just because of all this premium that we can see over here, it's the consistency of them as well. If we click over here to the order details on Cheddar Flow, we can scroll down and see that every single day there is an increase in the open interest for the most part. And it was relatively consistent except for these two outliers. You can see here July 3rd. So before that long weekend, there was 1,463 contracts added. And then over here, 1,671. This is going to be blown out of the water completely come Monday once the open interest comes in because of all of that flow we saw on Friday. So major outlier day that is super unusual, the amount of flow we saw. You can see the open interest based on this over here relative to the volume. A lot of contracts traded over here on Friday as well as on Wednesday with this orange bar here. And also on top of that, there was a lot of calls throughout the week. So this came as a significant surprise to see all of these puts, considering there weren't really that many puts throughout the week. And it was heavily call skewed the entire week as well. So definitely eye-opening. You can see over here on the Twitter account, the Cheddar Flow account here posted about all of it. They put trifecta, millions worth of SPY, QQ, and IWM puts. So all three of them very early in the session. And then also later on over here, you can see same thing was the case throughout the day. A lot of SPY puts, which is what I just showed you there on the flow. So I found this super interesting. And of course, we got that news, as you can see from Saturday, that Trump would impose the 30% tariff on Mexico and then the EU as well. So this will have implications come Monday. The question is how much? And I'm going to go over to the chart to show you what I'm looking at right now. So a very bullish outcome from this March/April tariff fiasco low that we had. This must hold level, this blue trend line over here held amazingly. You can see this trend line goes all the way down to the COVID low. It's been held since the 2022 correction. Over here held in the 2023 fall correction, also held over here. So this uptrend, and that's why I had this must hold all the way back when I was making videos in early April, end of March, because this had to hold in order for it to be very bullish continuation. We did see a lot of bullish continuation. Now we're at all-time high, believe it or not. So going over to where we are right now, yes, we saw a lot of put flow on Friday, and yes, there is some bearish news. However, I have to make this clear. As long as we remain above roughly 608 to 610, which is our previous all-time high level, this is now a demand zone, and we can draw a demand zone here for future reference. As long as we're above this range, it is macro bullish. We will see continuation. So despite all the puts I showed you, despite all of the tariff news, which a lot of it's getting absorbed recently, and you can see that evident based on something like Bitcoin, for example, and Ethereum, which I'll get into in a second, above this level is macro bullish. So even if news like this and puts like we've seen were to take it down, and I'll draw it out quickly here for you. But even if we were to go down all the way back to retest something like 610, this is still a buy the dip opportunity. It is not a buy the dip opportunity if it falls below. If we were to fall below that, say the last support would be 602.70, but realistically, this is the demand zone. It must continue to hold above this. And if it does, it will just continue to grind higher, and it might not even retest anytime soon. It could just continue to grind higher from here because we are still above it. So I want to make that clear before going into any other short-term outcomes, setups that I'm looking for in the near term, like for this week, because this is bullish and I'm going to be in a buy the dip mode as long as it continues to remain above for all of my trades. So just need to share that to preface it. But if we go to the shorter term chart over here for the 15-minute, we can see a couple things. First of all, a lot of momentum, not just because prices continue to go higher in a very quick fashion, but also because there's a lot of unfilled gaps. We have an unfilled gap up over here, another unfilled gap up over here. Also, this is technically unfilled still. This gap up is unfilled. And then you can see we did have a couple filled gaps that attempted to have continuation, and then it kind of evened out. Now we had a gap down that remains unfilled. However, all of this over here is very bullish momentum because of all of these unfilled gaps. And as long as these gaps remain unfilled, it will continue with that momentum. So As a result, again, buy the dip opportunities are prevalent. I'd assume we'd see some type of gap down come Monday just because of that tariff news. The question is by how much? So what I'm going to look at, there is an ascending triangle pattern over here on the S&P 500. We can see there's a couple variations we can do. For example, I could do the top from over here. This is my preferred one from this, like over there. But you also could argue that there's a channel in this way. You can see channel to the upside. It attempted to break out above and then fell back below. But for the purpose of this video, I'm just going to use this ascending triangle. I'll get rid of this over here as well. But essentially what happened on Friday was it attempted to break down below, but every single time it attempted, we had a 15-minute candle that was able to reclaim. So you could see attempt to break down and then 15-minute reclaimed, attempt to break down right here, 15-minute reclaimed. And that continued to be the case until we closed under on the close, which is the only time that it consistently was able to stay under. So going into the week, bulls need to reclaim this roughly 624 mid level around here, because that would be a bear bait is what I like to call it outcome, just like we saw over here where we saw it reclaim higher, and then over here as well, we saw it reclaim higher. Again, assuming we have some type of gap down, I'm not interested in buying it immediately in this range at all. If it goes under 622, it probably wants to wick under this low that formed on Friday. And you can see it go a lot lower. The one level that I am very interested in, at least in the near term, is this over here. And the reason this 618 level is very interesting to me is not just because it's a whole number, an arbitrary whole number that is for 618. It's because of the pronounced bounce we had from here. So very hard downside candle that we had in the 15-minute, and then an immediate bounce after. You didn't even see much of a wick under here, and continuation higher off an inverse head and shoulders. So this level will be the difference between us going back all the way down to around 610, 608, that level I mentioned earlier, the demand zone, or continuing much higher from there. And this is where I will have my trade entry, because if we were to fall below, have an hourly candle confirmation below roughly 618, I'd stop out around here, and then I'd wait until it gets back down a little bit lower, 608, 610. This is my secondary entry for a long position, and this is my first entry for a long position, 618. So I have two options in this case, no pun intended. And if we were to fall below, then I would cut it for whatever it was in this case. I'm looking at about like 2 points of risk on an hourly. And then I would just re-add a little bit lower, a lot more potential reward. You're looking at something like 6-8 points of upside in the near term. Because again, I expect it to continue either from 618 or 608, 610, have that continuation, probably going to continue all the way back up to around 620s mid, all the way up to 630 possibly. So that's what I'm looking at for potential trade outcome. It's not like these whales, if I go back to the flow over here, are inherently wrong. They see that bearish opportunity. Maybe even they had information of Trump sending over those trade letters. We've seen a lot of very obvious insider trades this year. This one isn't as obvious because of the expiration, but it's still possible that they knew beforehand and they wanted to reach for either protection or a directional bet. However, I just don't see this continuing a lot lower, at least from where we are right now, as long as it remains above that demand zone that I showed you earlier. So that's my thoughts on it. This is my plan for the week ahead. And something else supporting that, and this will be the last thing that I mentioned if I go back to TradingView, is actually crypto. And I've been talking about this, if you've been watching these videos for a couple months now, especially within the past couple weeks. I've been talking specifically about Bitcoin, MSTR, the call flow that we saw there. This is quite possibly one of the most bullish macro setups I've seen on a daily chart in my career of trading. This is super, super bullish. You can see left shoulder, head, right shoulder, very clean inverse head and shoulder setup in this case. And then we have a very clean breakout. Not only that, if you go look at this blue trend line, go to the weekly for this, since it goes all the way back to 2017, you can see over here, 2017 high, also our 2021 high, 2022, or end of 2021 high that is. And then over here, this high that formed in 2024, we are breaking out above it, as you can see right here. So very bullish in this case right now. This inverse head and shoulder can send this much higher. My target, if you remember, is still in the 140,000s. I think it can go all the way up to around 147,000 by end of summer, as crazy as that sounds. This is just super bullish. And the same exact thing in Ethereum. I actually prefer Ethereum. I think it's even more bullish. We have a double inverse head and shoulder. Believe it or not, you can see here, inverse head and shoulder, left shoulder, head, right shoulder, and then also a macro one, left shoulder. This is a giant head over here and a right shoulder and a clean breakout. Also is able to reclaim its own uptrend, as you can see from here. So I think this one can get all the way up to 3,600 by the end of the summer. And then after that, it can decide if it wants to continue a lot higher. The reason I bring this up is not only because it's an amazing setup, and it has been for multiple weeks now, as I've been talking about this in these videos, but also this is a bullish sign for equities as well. If money is flowing into these names, these speculative names, especially something like Ethereum, you don't have to consider Bitcoin as speculative. This is something that will benefit equities, especially risk on assets, part of the S&P 500, a part of tech predominantly. And we can see the market continue to climb a lot higher as a result. So if these are bullish, if crypto's bullish, you're probably going to see an underlying bid in the S&P 500 as well. That's the case. Typically, there's a higher correlation between tech and something like Bitcoin, for example. So the fact that these are breaking out and I expect them to continue a lot higher is very bullish for the market. Of course, we saw those put flows, but still, until a certain level breaks, like that demand zone I showed you on the S&P 500, I'm going to continue to be bullish and buy these dips. And that's all for me today. I'll see you guys in the next video.